a little harder, stack those sats, don't stack the dollar.
Right then, we're back again. Now this one, a little bit of an update video in response to one I did a month or two ago called "Should I Take Out a Loan to Buy Bitcoin?" And this is a tough it's a tough decision to make, definitely. And every poll I've put out a poll on the YouTube channel and on Twitter. Every single poll has been literally 50-50. You know, half the people said yes, do it, I've done it, it paid off for me, worth it. And then literally 50% on the other side of people saying don't even think about it, you will get wrecked. So there doesn't seem to be a clear answer either way. So I guess it's just personal preference, this one. Now, I've been thinking long and hard about it, and I'm at the decision now of not going forward with it for a few reasons. Now, we're currently hitting all-time highs with Bitcoin. I think this morning it was about $115,000 or something for one. So all-time highs, bull market. So in terms of going hard, taking loans out, that kind of thing, I think now's not the right time. You know, some people are saying 2026, 2027, there'll be a bit of a drawback, bear market, it's bound to happen. So if you're doing this kind of thing, do it when it dips. If it dips, this is another thing. Who knows? But I mean, yeah, doing this when it's hitting all-time highs, probably not the wisest, for a number of reasons, I guess. If you take out a loan and you buy Bitcoin at its peak, and you've got to pay back your loan plus interest, and then if the Bitcoin price starts dropping, you're going to think, well, it wasn't worth me even bothering with that, and you've still got the loan to pay off. But anyway, one of the most important reasons, I think, of why I've decided against it, I'll show you a comment that somebody left on the YouTube. Now, on the previous video, somebody commented and said, people need to understand how banks and inflation works. Loans create interest. That creates more money, more inflation. It makes it worse for everyone. Stop just thinking about yourself. And I thought that's actually a very good point there. When you go into a bank and you take a loan out, let's say, you know, a standard loan or a mortgage or anything like that, the bank aren't going into a vault and taking out £20,000 from their bank vault and giving that money to you. They are creating money out of thin air. When you sign your signature, they create credit, and that credit gets added into your account, and then you've got to pay that back with interest. Now, I'm not a fan of printing money out of thin air, because, and probably most Bitcoiners aren't either, because when a central bank decides to print more money out of thin air and add more currency to the circulation, everybody else's value of their savings goes down. The number stays the same, but the value of it and the purchasing power goes down. Now, if I was to take out a loan from a bank, let's say 20,000 quid, and that bank would then create 20,000 quid out of nothing, it would be credit. So in a way, I would be contributing to what I dislike, which is money printing. I would be contributing, taking advantage of debt to my own advantage, but everybody else would be disadvantaged because there's £20,000 more cash in circulation that wasn't in circulation before. Now I might be okay because if I take out 20,000, instantly buy 20,000 worth of Bitcoin, instantly transfer it into a more pristine asset, more scarce asset, I'd be fine. I'd be buzzing. I've got 20 grand's worth of Bitcoin sat there, and I've only got to pay off 6% or whatever it is interest on this loan. But eventually that would be, inflation would hit from that. It's like, almost like a mini Cantillon effect, but just on a very small micro scale. I don't know, maybe I'm wrong with that, but that I didn't even consider that until that guy said it on the comments. You know, that money is going to be freshly printed money. I'm going to be taking advantage of that, of the printing press to my own advantage. Okay, fine, but I'm going to be taking advantage of it to other people's detriment. Now, here's a comment from the Bank of England themselves in one of their own press releases. It basically said, whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. So it will be. You will literally be creating new money out of thin air. So, yeah, there we go. I mean, just something to think about, I guess. Something I'm thinking about. I mean, some people would say, well, if you're participating in that system at all, then it's immoral. You know, if you're using fiat at all, or if you're paying tax at all to corrupt leaders, etc. You know, if you're contributing at all to the system, you're funding war, etc. So, you know, I mean, I'm not trying to take some moral high ground, but I don't know, it was just an aspect that I didn't even realize. Yeah, so along with that, you know, I'm quite happy just to stack sats at my own pace, you know, stress-free, got the side hustle on the go, saving bits of money here and there. To me, that's low risk, stress-free, and I'm enjoying it. And it's working for me. Taking out a big loan, having that, you know, hanging over me to the point of, you know, let's say I get injured at work and I can't pay that money off 1 month, but I still got to pay it. If I can't pay it, the bank is going to be knocking on my door, sending bailiffs around, threatening court action, all that stuff, which I can't be bothered with because I don't like high risk. You know, I don't like stuff like that. Some people might, which is fine. You know, if you like high risk and you can handle it, then you're probably going to get a high reward if it pays off. I'm not that risk averse, so for me it's maybe not my vibe. I'm quite happy just DCA and chill. And you know, doing a few bits and bobs here and there. And I'm not gonna just be delivering McDonald's and whatnot on Uber Eats for the whole time, because that will take about, you know, 15 years to get to 1 Bitcoin. I've got some other stuff planned, so I'm not just going to be doing the same thing over and over, so stay tuned for that. See if these blackberries are ready. No, not quite. The whole paying off interest as well, I know that it's completely normalized nowadays, but I'm just not a massive fan of, well, usury and just debt in general. I'm not a massive fan of it. So entering into debt and then having to pay interest on top of that debt for the privilege of having access to that cash or that credit, I guess you could say. It's not it's not yet cash, it's credit. I don't know, it's just not a route that I feel comfortable with going down. Now, in terms of a loan, let's say in a year's time, Bitcoin crashes to, I don't know, has like a 60 or 70% pullback, and it goes to like $50,000 or something, like £30,000 for one. I may start thinking, okay, now is my chance to stack hard. I think at that point, I would first go to, you know, family, friends, you know, and just say like, can I borrow some cash? And they may let me borrow some, they may not. I don't know. I'm going to cross that bridge when we get there. But if there was any family or friends that said, okay, well, I'll lend you $5,000, I don't think they would start participating in usury on me. You know, I don't think like my auntie would say, okay, I'll lend you $5,000, but I'm going to want some compound interest back on this $5,000. I'll do you, 5.9% APR in the first month. You know, it'll be a bit more of a casual deal, a bit more of a stress-free deal, whether they're into it or not. I don't know. We'll see. For now, though, let's call it a day with this video because it's gone on long enough. I'm going to stay humble, stack sats. I'm going to keep cracking on. And there we go. That's where I'm at. Anyway, call it a day. See you later. See you next time.
Buy a little lower, try a little harder, stack those sats, don't stack the dollar. Buy a little lower, try a little harder, stack those sats, don't stack the dollar.